Welcome back to The Explainer. So today we are tearing into one of the absolute wildest, most explosive stories happening in the market right now. We're talking about Cloudflare, specifically their Q2 2026 earnings. Honestly, this isn't just a story about a tech company posting some blowout numbers. It's way bigger than that. We are literally watching a massive shift in how the internet itself operates, a historic tipping point for AI traffic. But as you'll see, what followed on Wall Street was pure chaos. We saw a massive euphoric surge, followed by a very sharp reality check. Let's get right into it.
Here is our roadmap for today. First, we'll hit those explosive Q2 2026 earnings, then we'll look at that massive AI traffic milestone, track the crazy surge and pullback of the stock, and finally, weigh the bull case against some very real key risks.
Okay, Section 1, Explosive Q2 2026 Earnings. Let's dive right into these phenomenal results.
To really grasp why the market reacted the way it did, you have to look at just how badly Cloudflare beat expectations here. Right out of the gates, they reported a massive total revenue of $696.1 million for the quarter. Now, this wasn't just a minor beat. They absolutely crushed Wall Street estimates of $664.7 million by nearly $30 million. When you're dealing with a company at this scale, blowing past expectations by that much is a huge flashing green signal of underlying business strength.
And it gets even better when we look at the growth rate. That revenue figure, it represents a staggering 36% year-over-year growth. So what's the big takeaway here? It's that Cloudflare isn't just growing, its momentum is actually accelerating. You know, in a pretty tough macroeconomic environment, seeing a tech giant push the pedal down and accelerate top-line growth to 36% is exactly the kind of stuff investors dream of.
So how exactly are they pulling this off? Well, it all comes down to keeping customers and getting them to spend more. Their dollar-based net retention rate hit 120%, which is up a full 6 percentage points from just a year ago. That means existing customers are spending significantly more money with them year over year. But they didn't stop there. They added over 80,000 brand new paying customers in this quarter alone, bringing the grand total to over 7.4 million. Oh, and get this, their really large customers, the ones spending over 100 grand a year, they now make up 73% of total revenue. That is absolutely huge.
Moving on to Section 2. The AI traffic milestone. Now, what's really fascinating here is this historic shift in the data.
Looking beyond just the raw financials, this quarter actually marked a permanent shift in digital history. For the very first time on Cloudflare's network, non-human traffic, meaning AI agents and bots, actually exceeded 50% of all traffic. Human traffic is literally the minority now. Just think about that for a second. And this AI agent request volume didn't just grow, it exploded by an astonishing 1,700% year over year. We are watching, in real time, the internet transform from humans browsing websites to machines talking to other machines.
Cloudflare CEO Matthew Prince summed it up perfectly. He stated, "As the web shifts to AI answer engines and agent-driven commerce, we are seeing a fundamental rewrite of the internet for machine-to-machine traffic." That is a bold statement. Cloudflare is aggressively positioning itself as the critical infrastructure layer for this new agentic internet. And hey, the big players are absolutely noticing. Analysts over at Morgan Stanley called out Cloudflare's Workers Developer Platform as a massive growth area. They pointed out that because it uses a consumption-based model, as AI machine-to-machine usage scales up, Cloudflare's revenue is going to scale right along with it.
All right, Section 3, the surge and pullback. Let's talk about the crazy stock volatility that followed.
Because of this insane AI-driven demand and those stellar earnings we just covered, Cloudflare confidently raised its full-year 2026 revenue guidance to over $2.86 billion. And Wall Street? They basically lost their collective mind. Tracking the stock price timeline is like riding an absolute emotional roller coaster. On August 6th, right after earnings dropped, the stock surged 17.41% in after-hours trading, hitting $333.95. The next morning, the euphoria kept going, climbing another 16.2% before the opening bell. But, you know, momentum is a fickle thing. By late August, gravity took hold and the stock pulled back 16.5%, settling down around $277.58.
Which forces us to pause for a second, take a breath, and ask the most critical question of this whole explainer. Is the market getting a little ahead of itself? I mean, we've clearly seen the undeniable fundamental boom of the actual business, but now we really need to pivot to the reality of its valuation. When we compare the numbers side by side, it brilliantly illustrates exactly why investors started taking profits and driving that late August pullback.
Cloudflare is trading at a jaw-dropping price-to-earnings ratio of 257. Contrast that with a tech titan like Amazon, which sits at 36.6, or a direct industry peer like Akamai at just 15.3. Paying 257 times earnings, it's kind of like buying a house and paying a massive premium that prices in the next 3 centuries of neighborhood appreciation. Even on an enterprise value-to-revenue basis, Cloudflare is sitting at a massive 40.7 times estimated 2026 revenue. The market is literally pricing in absolute perfection for years to come, which, let's be honest, leaves virtually zero margin for error.
Section 4, Bull Case versus Key Risks. It's time to weigh the evidence.
So how on earth do we balance this undeniable business success against such an extreme market premium? Well, let's start with the risks, because there are a few flashing red lights for the bear case here. First up, on a GAAP basis, Cloudflare actually posted a net loss of $170 million. Now, to be fair, $150.7 million of that was tied to restructuring charges from a 20% workforce reduction they announced back in May, but hey, it's still a heavy loss. Second, we're seeing massive insider selling. The CEO recently sold off roughly $46 million in shares, and overall, insiders have dumped $184.6 million in just the last 90 days. And there's been zero insider buying. On top of that, they announced a massive $2.175 billion convertible debt offering, which brings in the risk of shareholder dilution. Finally, the macro headwinds. The 30-year Treasury yield recently spiked to 5.323%, the highest since 2007. And as we know, rising rates heavily punish high-multiple growth stocks exactly like this one.
But wait, don't count the bulls out yet, because their case is incredibly resilient. You really can't ignore an accelerating 36% revenue growth rate at this massive scale, especially when it's fueled by a 1,700% explosion in AI traffic that positions them as the literal backbone of the future internet. Plus, their free cash flow is actually improving. It hit $56.4 million, which is 8% of revenue, up 69% from last year. And institutional conviction, it is still very much there. Cathie Wood's ARK Invest recently swooped in with a very notable $20 million purchase.
This intense tug-of-war between incredible growth and extreme valuation has completely fractured Wall Street. The current analyst ratings show this perfectly. Across 34 analysts, the consensus is technically still a buy with a $333.55 target. Citi is super bullish, maintaining a buy with a massive $400 price target. KeyBank is sitting at overweight with a $375 target, but then we see a massive divergence. Seeking Alpha formally downgraded the stock to neutral, specifically citing those valuation extremes we talked about. And the lowest estimate on the street? It sits all the way down at $160. The incredible gap between $160 and $400 tells you exactly how deeply divided the financial world is on how to price this company's future.
Which leaves us with this final thought to chew on. Cloudflare is undeniably standing right at the center of the AI revolution. They are rewriting the very fabric of the internet and posting explosive, accelerating growth. But man, the cost of admission is historically steep. So what do you think? Will Cloudflare execute flawlessly to justify this massive AI premium in the years to come? Or will the gravity of its own valuation ultimately pull it crashing back down to earth? It's honestly one of the most fascinating stories in the market right now, and for sure it's one we're going to be watching very closely. Thanks so much for joining me on this explainer. Keep learning, and I'll catch you next time.